today we are going to talk about pips. And usually for you to be able to know the amount you are going to lose in the market and the amount you are going to gain in the market, usually pips play a very important or vital part in it. Okay, so you have to understand the calculation of pips, how you'll be able to calculate pips in the forex market. In case you are, or in case maybe you are executing a trade, you have to know how you'll be able to calculate pips. So I know most people have been hearing about pips in the forex market. So what I was trying to say is pips is what? A unit of measurement to express changes in what? The exchange rate. So I said last time we talked about exchange rate, and we said exchange rate is simply comparing the prices of two currencies, or the price value of two currencies. So if you have an instrument like, or a currency pair like Euro USD, maybe they have quoted it like 1.9645. It simply means what? You need 1 euro to be able to get yourself, before you get yourself 1 euro, you need to get $1.9645 before you'll be able to get yourself what? 1 euro. Or if you are having 1 euro on yourself, you'll be able to get $1.9645. Okay, so this is what? Exchange rate. And I'm saying with pips, for you to calculate pips is simply what? The changes in the exchange rate, and also is the changes in the quote currency. Okay, is the changes in the quote currency or the counter currency. So 1.964 is the counter currency. So if this one increase or decrease, the difference is called what? Pip. So that's what I'm talking about. If this one, so supposing this one is currently, this is 1.9645. okay, so if it moves 1.9646, the difference between the 1.9645 and 1.9646 is called what? Pip. Okay, the difference is called pip. The difference will be 1. So the one is what? Expressed as what? Pip. That's what I'm talking of. The 1 is expressed as pip. So usually currencies are quoted in 4 decimal places. Currencies are quoted in 4 decimal places. In 4 decimal places. Okay, so the way I've quoted this one, usually with currency, that's how they are being written, or they are being what? Yeah, that's how they are being written. So usually currencies are quoted in what? 4 decimal places. So when you are calculating pips are calculated on the 4th decimal place of a currency, for a currency pair. Okay, pips are calculated on the 4th decimal place of a currency pair. So when you see this one, Euro USD, the 4th decimal place is what? The 5th one. So with the decimal place, this is how you are going to calculate it. The numbers after the points is where you start calculating or counting your decimal what? Places. So with 1.9645, if you are counting your decimal place, you start from here. So it's when it moves, this one is your first decimal place, the decimal. So this is second, this is what? Third, and this is your 4th. Okay, so usually, as I was saying, currencies are quoted on the 4th decimal place. So currencies are quoted in what? For the 4 decimal places. Okay, currencies are quoted in 4 decimal places, but with pips are calculated on the 4th decimal place. Okay, so with this one, the 4th decimal place, as I've showed you, this is the first one, this is the second one, the 4 is the what? Third one, and this number is the 4th decimal place. So if you are calculating your pips, you start calculating it on what? The 4th number, the 4th number after the point. Okay, so this is the point. So the 4th number is 5. So if you are calculating your pips, you are going to calculate it on this one. Okay, you are going to calculate it on this one. So we have some exceptions. So we have, with every currencies are quoted on 4th, the 4th, they are quoted in 4 decimal places, with the exception of what? Yen. Okay, the Japanese yen. With the Japanese yen, they are quoted in what? The 2nd Japanese yen is quoted in the second decimal place. Okay, but with that exception, all the currencies are quoted in the fourth decimal place. So in case you are calculating your pips, you are going to calculate it on the fourth decimal place. Okay, you are going to calculate it on the fourth decimal place. So what I'm trying to say is, so this is where you are going to calculate. This figures is what you are going to use to calculate your pips. Okay, this is the quote currencies. Okay, so with the pair GBP USD, this is the what prices for the dollar. Okay, so with £1, you'll be able to get yourself maybe 1.25400 400. With £1, you'll be able to get yourself 1.25600. Okay, so this is where you are going to calculate, or this is the numbers you are going to calculate your what you are going to calculate the pips on. So let's say with this currency pair that I've opened, GBP USD, okay, let's say it is 1.24600. okay, so you see with this one, they have quoted it in what 5 decimal places. Okay, so usually the fifth one is called what fractional pips. So in forex trading, we don't use the fifth one. Okay, in forex trading, we are not going to use the fifth one. We usually use what the fourth decimal place. So take note of this. So the last one, as I said, GBP. So GBP USD, okay, is 1.24600. So as I said, usually on your broker platform, they are usually going to quote it in what the fifth decimal places, but you are not going to use the fifth number in our calculation. We are usually going to concentrate on the fourth decimal place. Okay, we are usually going to concentrate on the fourth decimal place for our calculation if you are calculating pips in forex market, with the exception of the yen. Okay, with the exception of yen. I'm talking of currencies, I'm not talking of commodities. With currencies, when you are calculating your pips, you are going to calculate it on the fourth decimal place. You are not going to calculate it on the fifth or the second decimal place. So when you are calculating our decimal place, as I said, with the decimal place, you start the numbers after the point. Okay, so this is the point. So after the point, the fourth number is where we are going to start calculating our decimal. We are going to calculate our pips on. Okay, so this is the point. So let's say we are counting the fourth decimal place. We are moving to the fourth decimal place. If you are moving, it will be like something like this. So this is the first decimal place, this is the second decimal place, this is the third decimal place, and this is the fourth decimal place. So if you are calculating it, you are going to calculate it on the what? Then this number 5. Okay. So let me give an example. Supposing so let's say this is the current price that I'm talking of. Let's say Euro USD, or let me use this page, GBP USD. GBP USD is 1.2400. Okay, and let's say GBP USD moved 2 pips. Let me use 3. It moves 2 pips. Okay, if you say it moves 2 pips, so if GBP USD moves 2 pips, okay, you are going to add 2 to the 3. Okay, as I said, with pips are calculated on what? The fourth decimal place. So if you want to calculate the new value or the new exchange rate, calculate the new value. Okay, if you want to calculate the new value, you are going to add 2 to the 3. Okay, you are going to add 2 to the 3. So let's say, so the solution will be, So we have 1.2403. Okay. So if you want to calculate the new value or the new price, I said you calculate it on the fourth decimal place. You are going to add 2 to 3. Okay. So we have 0.0002. Okay. You add 2 to the 3. This is the what? This is the fourth decimal place, on the fourth decimal place. So the answer will be what? If you add 1.2403 to what? 0.0002, it will be what? 1. So 1 plus 1. 1 plus 0 will be what? 1. 0.2405. Okay. So the new price, the new exchange rate or the new quote currency will be 1.2405. Okay, so this is very basic. So those who are advanced, is going to be simple for you. But this is going to be the new price. Okay, I was saying pips are calculated on the fourth decimal place. Okay, pips are calculated on the fourth decimal place. So if you want to calculate, so let's say GBP USD, if I've given you a signal and I said GBP USD, GBP USD has moved 2 pips. Okay, if it moves 2 pips, you are going to add 2 to the fourth decimal place. As I explained, pips are calculated on what? The fourth decimal place. So if you are doing your calculation, you are going to add 2 to the 3. Okay, so 2 plus 3 will be what? 5. So 1.2405 will be the new value or the current exchange rate, okay, for GBP USD. Is it clear? Is it clear
Yeah,
with that?
so yes, please. But what I want to know
Yes.
is that if, let's say, you want to open a trade, and let's say someone gives you a signal about it. So you need to calculate it before you open the position.
Yeah. Yeah, you have to calculate it. So with the pips is going to help you to what? Set your stop loss, and pips is going to help you determine the stop loss price. So when you talk about I will talk about the stop loss too. Pips is going to help you to determine the price for the stop loss and the price for your take profit. You get it? So the stop loss simply means the amount you want to, in case maybe your projection or your prediction didn't go as you projected or predicted. This is the amount you are willing to lose in the market. So that's what the stop loss. So the stop loss, the pips is going to help you determine the stop loss price. Okay, and pips is also going to help you determine your take profit price, the amount you want to gain if price is moving in your favor, where you want your brokers to what? To take you out from the market. Pips is going to help you what? To determine those prices. You get it? Is it clear with
Yeah,
that?
yeah,
Yeah. So you have to understand pips. You have to understand pips. If you don't know how to do the calculation, you have to take it serious today. Okay. So this is the current price. If you are calculating it, always start for the fourth decimal place. So as I said, usually on your brokers platform, some brokers will quote it what? They will quote the prices like they will quote the prices in 5 decimal places. But usually in forex trading, if you want to calculate pips, you usually take the 4th decimal place into consideration when you are calculating pips, with the exception of what? The yen. Okay, with the exception of the yen. So let me give you an example. Let's assume, let's say GBP USD, let's say GBP USD, the current price is 1.2346, okay, 7, and it has moved it has moved let's say 9 pips. Okay, it has moved 9 pips. Calculate the current calculate the current price. Okay, so if you want to calculate the current price for this one, this is how you are going to do it. As I explained, pips are usually what? Calculated on the fourth decimal place. So if you can see, GBP USD was what? 1.23456. This is the exchange rate. You can see it has been quoted in the what? It has been quoted in 5 decimal places. To calculate the exchange rate on currency that involves the yen and currency that does not involve the yen. Okay, so with currencies, one thing you have to notice, currencies are what? Calculating pips. Currencies are usually quoted on the what? Currencies are quoted on 4 decimal places. By calculating pips on currencies are calculated on the 4th decimal place. Okay, with the exception of the yen. So with the yen, pips are calculated on the 2nd decimal place. Okay, so this one is going to help you to know your what? Stop loss prices and your take profit prices. Okay, so these prices you see over here is the prices for the quote currency. So this is what this is what we are talking of. So when you talk of pips, this is the current market price. So let's see this market. Let's see this market. So you see the heading line over here. This is the current market price. Okay, this is the current market price. So if this current market price, the current market price is what? 199.685. This is the current market price. If it moves from here to here, okay, this is what we are talking of. From here to here, how to calculate the pips is what I'm talking of. Okay, so the current market price is 199. The current market price is 199.684 679. This is the current market price. You get it? And we are saying now it has moved what? It has moved to 199.850. So what is the difference? So the difference is going to give us the pip. So that's what I'm saying. Pips are what? The changes in the exchange rate. So this is exchange rate. It simply means what? With £1, you'll be able to get yourself. This is the current market price. So in case maybe you are having pound on you and you're about to travel to Japan, you know you can't spend pound when you go to Japan. Okay, you have to change your pound to what? To yen. Okay, but before you change your pound, if you are holding £1, you'll be able to get 199.682 yen. That's what I'm talking of. Okay, that's exchange rate. So if you are having, let me repeat myself, if you are having £1, this is the current market price. So in case if you go to the airport and you want to exchange your pound to what? Yen, they are going to give you 199.682 what? Yen. Okay, so let's check maybe dollar cedis, USD GH. So you see USD Ghana cedis. No one is trading it, that's why you are not seeing. So this is the current market price. Okay, so you see with $1, if you have $1, you get what? 14.700 Ghana cedis. I hope you can see it. So the heading line is the current market price. So with $1, you get yourself what? 14.700. Okay, this is the current market price. Or if you want to travel to the United States and you're having 14 cedis on you, if you want to convert it into dollars, they are going to give you what? $1. With your 14 cedis, you'll be able to get yourself $1. That's the simple explanation for exchange rate. So please take note. So when you are calculating pips is calculated on the changes in this the changes in the quote currency. Okay, so with the quote currency, you usually have the bid and the ask price. But if you want to calculate it, you are going to calculate it on the current market price. If you are buying, it's going to if you are buying, they are going to give it to you at the ask price, and if you are selling, they are going to give it to you at. If you are selling, if you have a currency that you are selling to maybe your exchanger, they are going to give it. They are going to exchange it at what? The bid price. Okay, so these prices you see over here is what we usually calculate the pips on. Okay, so let's say if 14.70, now the exchange rate increased to, if the current price, this is the current price, if the market moves to 14.700 to what? 14.7196. The difference is called what? Pips. Is it clear? Is it clear? Are you people getting it?
Yeah, it's clear for me. Now I need to know in case
Yes.
if it drop down now, you will minus it.
Yeah. Okay. So what we are doing is what is the plus. You are adding it. So in case maybe if the market drops, so you talk about that when you get to the stop loss and the take profit. So when the market drops, okay, when it drops, that one you subtract, you minus it, okay. But if it increase, you add it to the current price. You add it to the current market price. But if it drops, you are going to what? Subtract it from the current market price. Okay. So if there's no question on how to calculate is there any question on how to calculate pips? If there's no question, then let's move to the stop loss and the take profit. Okay, then you calculate the current prices and the current price on the take profit and the stop loss. So let's talk about the stop loss and take profits. So when you talk about stop loss and take profits, they are usually what? Instruction that you give to what? Your brokers for them to what? Execute it in a line. It's an instruction or a command that you are giving to your forex brokers. So it's like, you see, if you know standing order. Standing order simply means what? You are giving your bank an instruction for them to deduct an amount of money from your bank, maybe every month or every day. Okay, so it's the same thing as stop loss or take profit. So with standing order, in case maybe you are a salary worker and you want to do some savings, but you don't like, it will be very difficult for you to be doing the deduction, going through the process, putting the money, setting the money aside. So you just tell your bank, you tell your bank, or you fill a form for your bank to what? You are instructing your bank to take this amount of money from your salary anytime that your salary will drop in your bank account. So anytime that your salary drops into your bank account, the bank is going to automatically what? Deduct that amount of money from your salary every month. So it depends on the time you are going to, or it depends on the duration you've given your bank for them to deduct. So it's the same thing as stop loss. So stop loss too, you are giving your broker an instruction for them to what? To execute. So stop loss, when you talk about stop loss simply means what? The amount, it simply means the price. Stop loss price simply means what? The price you are setting in case the market is going against you. Okay, and take profit is the price you are setting in case maybe if the market goes according to your projection. If the market goes according to your projection, you are setting a certain price for what? Your brokers to take you out. You are okay with that profit. Okay, so your brokers to take you out. And stop loss is the opposite of take profit. So in case the market is going against you, this is the price you are willing to risk in the market. That's very simple. So if you want to know the stop loss price and the take profit price, so let's say maybe you have been given a signal, like maybe buy. Okay, let me see. We take profit if you are buying. If you are buying, we take profit. You are going to add, okay, and you are going to subtract the stop loss from the current market price. But if you are selling, you are going to subtract your pips from the current market price, and you are going to add the take profit to the current market price. Is it understood? Is it clear? Am I making sense? So let's say maybe I've given you a signal like buy GBP USD, stop loss 10 pips, take profit. So the SL means what? Okay, let me use take profit, maybe 20 pips. Okay, so this is the instruction I've given you to execute. So this is GBP USD, and I'm saying what? So this is let me give the current market price 1.24368. Okay, so this is the instruction I've given to you. So I say buy GBP USD with the current market price of 1.2456. So this price that you are seeing,
on which time frame, please?
we are not talking of time frame over here. Time frame is not needed over here.
Okay.
Okay. So what I'm saying is what? When I say buy GBP USD, this is the current market price, and this current market price you are seeing is the bid and the ask price. Okay, you will usually see the bid and the ask price based on what you are doing. If you are buying, as I said at the time, if you are buying, you are going to use what? We are going to take GBP, the pound, as a reference element. Okay, so if you say buy, that means you want to see what? Green candles. If you want the market to be what? Bullish. Okay, so if you are buying, your brokers are going to give you what? The ask price. So let me quote the ask price too. So let's say this is the ask price. Let's say this is the ask price. We have 1.2424689. Okay, so if you see this price, this is the bid price and this ask price. So if you are buying, you are going to buy it at what? The ask price. So always, one thing that it will make it simple for you is what? Always the bid, the ask price should be greater than what? The bid price. Okay, so if you are buying, your brokers are going to give it to you at the ask price. Okay, if you are buying pound, they are going to give it to you at this price. So that's why usually when you go to your MetaTrader 5, you see some two lines over there. So the two lines you see, one is what? One price is the ask price and one price is the ask price based on the market condition. Based on the market condition. So if you say buy GBP USD with they are going to give it to you at the ask price. So if you want to calculate your stop loss and your take profit, you are going to focus on what? You are going to focus on this price. Okay, so this price is what you are going to calculate our stop loss and our take profits on. So let's say, so what will be our take profit? So what will be our take profit? So the solution will be, so if you are buying, you want the market to move up. Okay, you want to see bullish candles. You want to see bullish candles. If you are buying, you want to see bullish candle. So that means what? Take profit, as I explained. Take profit simply means what? Where you are willing to take, where you are willing to what? Where you want your target to. In case maybe price goes in your favor, where you want the market to be to take you out. Okay. Take profit simply means what? The market is going as you projected. And stop loss means what? The market is going against you as you projected. Is going against you. Maybe you predicted buy and now the market is going down. So the down, where the price that you set will serve as your take profit, and your you serve as your stop loss, and your take profit, the price you set over up here is going to serve as your take profit. Okay, so take notes. So we said the stop loss is going to be what? 10 pips. So since the price, we want price to move up and we set our stop loss 10 pips, that means what? We are going to deduct 10 pips from this one. Okay, and we are going to add take profit to what? We are going to add 20 pips to this one. Okay, all right, so let's do the calculation. So let's first calculate the take profit, because that's what most traders focus on. So where you want the market to reach, the price you want the market to get to. So with the take profit, we said 20 pips. Okay, so I said pips are calculated on what? The fourth decimal place. Okay, I said it is calculated on the fourth decimal. So this is the fourth decimal place. So you are going to add 20 pips to this 7. Okay, we are going to add 20 pips to this 7. So this is how we are going to calculate. You take out the current market. We bring up the current market price of 1.2467. Okay, so we are going to ignore the fractional pips, as in what? We are going to ignore the pipet or the fractional pips. We are going to only take this one, the 7, into consideration. So we are going to add, you said 20 pips, so it will be 0.0020. Okay, So if you are calculating, you start from what? Your right. So 7 plus 0 will be what? 7 plus 0 will be 7. 6 plus 2 will be what? 8, right? 4 plus 0 will be 4. 2 plus 0 will be 2. 1 plus 0 will be what? 1. So it will be 1 point. So this will be our take profit price. Okay. This price is our TP. This price will be our take profit. Okay. 1.2487 will be our take profit. Our current market price was, this is the current, let's say this is the current market price. The current market price is 1.24678. This is the current market price. So now we said the take profit should be that, as we calculated, the current take profit price will be 1.2487. So you see the 1.2487 is greater than this one. So the take profit, let's say the take profit will be here. So this is the price you are going to set. It will be 1.2487. Okay, so this is the take profit price. So if you can notice, you see the take profit price is greater than the current market price. The current market price is 24678. So as I said, we are going to ignore the pipettes or the fractional pip. It's supposed to be in four decimal places. Okay, so 1.2467, 1.2487. Okay, so you can see the take profit price is greater than, or is bigger than what? The current market price. So let's calculate our stop loss. So with the stop loss, we are going to what? Subtract MPIPs from the stop loss. So this is the current market price, 1.2467. As I said, you are going to ignore the pipettes, the fractional pip. So it will be 0.0010. Okay, so if you are doing the math, you are going to subtract. Okay, so 7 minus 0 is going to be, as I said, you start from your extreme right. So it's going to be 7. 6 minus 1 is going to be what? 5. 4 minus 0 is going to be 4. It's going to be 4. Okay, 2 minus 0 is going to be what? 2. 1 minus 0 is going to be 1. So it will be 1 point. So this will be our stop loss price. Okay, it will be our stop loss price. So the stop loss is going to be here. The stop loss price is going to be here, which will be 1.2457. Okay, so you see, with the current market price, the stop loss price is what? Lower than the current market price. I hope you can notice this. Okay, I hope you can see it. The stop loss price. So this will be our take profit price. This will be our stop loss. Stop loss. This is the price for the stop loss. And this is the price for the take profit. This is the price for the take profit. Okay, this is the price for the take profit. Is it understood? Any question?
No.
Any question on what I did? So if there was no question, so with the math that I just did, you don't have to be doing this math. So technology has helped us to it has provided, or it has given us a tool that you are going to use in what? Calculation. But it is better if you are a professional, since this is a business. As I always say, this is a business. So if you want to take it serious, you have to know how to calculate the stop loss and the take profit. So as you've learned the practical part, if you want to know how to use the various tools to calculate your stop loss and your take profit with TradingView. This is the TradingView platform. So if you are not having it, you click on, or you search with your search engine, you type in tradingview.com. okay, when you type in tradingview.com, this is the tool. When you come to this side, you use this tool, the range. Okay, the range, price range, is going to help you to determine whatever this long calculation that you've done. Price range, when you use the price range, it's what help you to get your stop loss and your take profit. So let's say I said what the current market price is, let's say maybe 1.2. This is the current market price. And if I want to calculate the pips, when I use the price range, this is the price range. Okay, so you can put the price range on favorite. If you click on the yellow sign, it will be what? It will be added to your favorite. So you first of all put the price range on the current market price. So you have to understand this basic principle. You have to understand, if you are buying, that means what? Your stop loss should be down. So you stretch it down, okay, to get 10 pips. So you see, when you stretch it down, because the current market price is up, there was negative. Okay, so you calculate it on negative 10. So negative 10 will be here. Okay, so this will be your stop loss. Okay, so you see the negative 10.0, you are going to take the 10 into consideration. So this is the pips. Okay, this is the pips. So you see they've written those negative aside. So that means what? Negative means what? The amount you are losing. Okay, so this is the price you are going to set it on your MT5. Okay, on your MT5 or any platform that you are using. Either you are using CTrader or TradeLocker. This where you are going to set. So you check the price. This is the price. So the price will be 194.797. Okay, 194.797 will be the price, and this is the take profit. So there's no need for you to go through all the calculations that I just did, but I just wanted you to know the overview of how pips is being calculated and the other stuff. Okay, but if you want to use the tool, you use the range. When you click on the range, you stretch from what? The current market price to what? Where you want to set your stop loss. So it will give you the price and what? Your take profit, the pips that you are risking. Okay, so 10 pips, the current price will be 194.803. Because when you go to your MetaTrader 5, you have to what? You have to type in the price over there. Okay, so if you want to see the price, so this is the price. So when you come here, you see, you have to set in. So you see what you see when you click on the quote. This is what, if you click on buy, if you are buying, the broker is going to ask you to set your stop loss and your take profit. So with the stop loss price, this is where you are going to set it. Okay, this is where you are going to set it, and you need to set your take profit. So you add the prices over here. Okay, so it's always very important or necessary for you to know the stop loss price and the take profit price. So when you go to your MetaTrader 5, you are going to set your take profit price, because if you don't understand these basic things, you are going to lose an amount of money that you didn't expect to lose. That's why it's always important for you to understand how to calculate the prices. Okay, other than that, you are going to lose an amount of money that you didn't expect to lose. So take profit, you have to know the price you are setting it, and stop loss. So this one will allow you to to go out in case maybe there was a position running. This one will allow you to do whatever you want to do without monitoring it 24/7. So you have to. It's important for you to know how to calculate the pips, the prices for the stop loss, and the prices for the take profit. So if you go to your MT5, when you click on buy, your broker will display something like this. When they give you something like this, you have to set your stop loss. So when you click on the plus sign, you set your stop loss price. When you click on the take profits, you set what? So plus means what? You are increasing the price. The minus means what? You are reducing the price. Okay, so you can exploit it yourself. So go through that after this session. Okay, so is it understood? So if you are selling too, so we talked about the buy. So with the buy, your take profit should be up and your stop loss price should be what, down. But when you are selling, you are going to what, subtract take profit and you add a stop loss. It is opposite of what, the buy. If you are selling, let's say I said sell, so my time is up. So if I say sell GBP USD, so that means I want price to what, go down. Okay, I want price to go down. So if you want price to go down, that means what, your stop loss, in case the market didn't go didn't move as you expected, you want price to what, if in case price is going against you, this is the price I want my brokers to take me out. So that one will be your what, that one will be your stop loss. And if price is going against you, this is the current market price. This is the current market price. This is the current price. So in case if price is going in your favor, this is where you want your brokers to take you out. You are okay with the profit. Okay, it's simply you are okay with the profit. So this is where you want to be taken out. This is where you want to be taken out. So take note of them. Okay, you have to take note of them and know how to calculate it. So if you are selling, you are going to what, subtract the take profit from the current market price. If you are buying, you are going to what, add, because the price will be moving up. So you are going to add what, the pips to what, you are going to add the pips to the current market price. And if you are selling, you are going to what, if you are selling with a take profit, you are going to subtract, because you want price to get down more, you want price to fall more. So if you want price to fall more, you are going to deduct it from what, the current market price. So please, your question.
But for now, I would like to ask about, what about gold? Does it have the same calculation as
So the reason is as because I was dealing in currency. That's why I didn't want to bring gold, because I've already said gold is a commodity, it's not a currency. So if you are talking of gold, but with gold on this thing, when you are calculating the pips, you are going to calculate it on the first decimal place. Okay, so you see the JPY, you are going to calculate it on the second, but with gold you are going to calculate it on the first. Okay, so usually this is how gold is being quoted.
Okay.
So let's say SAUUSD. SAUUSD. Okay, let's see. So you see, with the Forex, as I quoted gold over here, it's not popping up. So I have to choose where gold is supposed to what, the asset class that gold falls on. Okay, because gold is not a Forex distance. So let me choose. So you see how gold is being quoted over here. So the current price for gold is 2,000. So 2,343.340. So 234.34. Please kindly mute yourself if you know your background is noisy. So with gold, so as I said, with gold, you are going to calculate it on what, the first decimal place. Okay, so let's say if gold moves 2 pips, you are going to add 2 to the 5, okay, 2 to the 3.
Okay.
Is it understood?
Yes, sir. Yes, sir. I just wanted to know the decimal place.
So it will be added to the first decimal place. Okay. It will be added to the next.